Hey everyone, and welcome to The Explainer. Today is May 12th, 2026, and listen, we are witnessing a massive, undeniable pivot in the cryptocurrency ecosystem right now. If you've been watching the charts this week, you already know there's just a ton of noise out there. But if you look beneath that noise, a fundamental, structural maturation is happening. Today we're going to dig into the hard data and the major institutional moves that prove this market is literally rewiring its architecture from the ground up.
First things first, look at this number, $78,000. Right now, Bitcoin is anchoring itself at this exact level, establishing a really powerful mean stabilization point. And this isn't just some fleeting intraday price action, right? This is the market setting a concrete baseline. What's absolutely fascinating is that this specific price stabilization is exactly what's giving the industry the breathing room to build out some massive structural market upgrades behind the scenes.
Which naturally brings us to the big question, is the crypto market actually finally growing up? I mean, for years, the narrative has been totally dominated by speculative hype, wild retail swings, and, dramatic headlines. But today's developments really suggest we're moving past that era. We're entering an age of sophisticated infrastructure, highly regulated pathways, and high-frequency institutional systems. It's a whole new ballgame.
Okay, let's dive into this. We're going to quickly cover the 78K market reality, the huge upgrades to institutional plumbing, the rise of the AI agent economy, how the industry is defending the AI frontier, the stablecoin wars, and finally what the true market mean looks like moving forward.
Let's start right off with Section 1, the 78K market reality.
So what's actually keeping Bitcoin anchored here? Well, as this market matures, it's actively working to shake off some recent hurdles, specifically that traditional Fed ceiling and the heavy miner sell pressure we were seeing earlier this month. This 78K baseline is acting like a sturdy foundation. It's giving Wall Street and institutional builders the confidence they need to let their heavy-duty infrastructural developments take center stage.
And that leads us perfectly into Section 2, upgrading institutional plumbing.
Before we get into today's news, let's just make sure we're on the same page with this concept. Institutional plumbing is exactly what it sounds like. It's the regulated, high-frequency infrastructure. Think of them as the foundational heavy-duty pipes that bridge traditional finance, or TradFi, with the decentralized world of DeFi. Bottom line, without these pipes, large-scale institutional capital simply cannot flow safely into the crypto space. Now, check out the sheer volume and scale of the adoption happening all at once today. It's incredible. 21 Shares is officially listing its spot Hyperliquid ETF, ticker THYP, on the Nasdaq. This is a massive litmus test for Wall Street. If it sees strong opening day volume, we could be looking at a huge beta rally across the broader decentralized derivative sector. At the exact same time, Anchorage Digital and SharpLink are launching a $125 million institutional DeFi yield fund to capture sophisticated on-chain returns from major allocators. And in the corporate treasury world, Corpay just tapped BVNK to integrate stablecoin wallets directly into their global payments, replacing slow, pre-funded bank accounts with near-instant settlement. This is literally the plumbing being laid down in real time. So with those new pipes in place, we got to look at the operators running inside them. Moving to Section 3, rise of the agent economy. Guys, we are witnessing a historic leap right now. Just compare the traditional clearing bank on the left, human-led, relying on slow legacy fiat wire rails, with Augustus Bank on the right. The OCC just granted conditional approval for Augustus Bank, making it the very first clearing bank built from the ground up entirely for the AI economy. That's right. We are literally letting robots do the banking. We're talking about machine-to-machine liquidity moving from a fun, speculative niche into a fully regulated financial reality.
And hey, this AI-native shift isn't just happening at the big clearing bank level, it is hitting the consumer layer too. Today, MoonPay announced they acquired Dawn Labs and launched a tool called Dawn CLI. This lets users execute incredibly complex on-chain trading strategies using just plain English commands. AI agents basically translate your everyday words into immediate, machine-speed market action. It's wild.
So why does this actually matter to you? Because machine-to-machine liquidity creates a ridiculously powerful structural tailwind. Think about it. AI agents don't panic sell based on human emotion. They operate purely on programmable logic and yield strategies. As billions of dollars start flowing through this automated agent economy, it drastically reduces the impact of typical human-driven market pressures. That could potentially decouple crypto from traditional macro constraints, like that Fed ceiling we talked about earlier.
But of course, with incredible new technology comes a whole new class of risks.
let's look at Section 4, Defending the AI Frontier. This is the new cybersecurity reality of the agent economy. The Federal Reserve and the Treasury recently flagged what they're calling Anthropic-class AI threats as severe systemic risks to our shared financial infrastructure. We're talking about rogue AI models actively hunting for smart contract flaws at machine speed. In direct response to this, OpenAI just launched a tool called Daybreak, which marks a massive expansion into AI-driven cybersecurity. Wall Street and crypto operators are watching this so closely, relying on these defensive AI models to protect billions of dollars in DeFi from automated exploits. It is literally machines fighting machines.
Okay, so we have the plumbing and we have the AI agents. But what are they actually moving around? Mostly stablecoins. Moving to Section 5, Stablecoin Wars and Regulation.
This quote right here brilliantly illustrates the strategic chess game happening behind the scenes. Nathan McCauley, the CEO of Anchorage Digital, said this today as his firm announced they're stepping back from the Robinhood and Kraken-backed stablecoin group. Why? To remain completely neutral. Anchorage wants to position itself as the core, unbiased settlement provider for multiple competing digital dollar initiatives, rather than picking a favorite in the escalating stablecoin wars.
And that neutral positioning is absolutely crucial because the actual rules of the road are finally being written. Just track the path of the Clarity Act with me on this timeline. After months of strategic legislative delays in Q1, we saw a sudden, coordinated pressure campaign from the Treasury and the SEC in early May. And now the result. The Senate Banking Committee has officially confirmed a markup for the Clarity Act this Thursday. Now, while the bill still requires significant Democratic support to pass, this is a monumental legislative event that's going to dictate how stablecoins and their yields are regulated in the U.S.
All right, let's bring all this narrative back to the macro outlook. Section 6, the true market mean.
See that 15%? That regulatory timeline we just looked at is already being priced in. Circle stock, ticker CRCL, has rallied 15% today alone. Investors are using Circle as a direct proxy for market anticipation. They are betting heavily that Thursday's Clarity Act markup will result in a massive breakthrough for U.S. stablecoin regulation.
So the absolutely crucial point here is this. Keep your eyes locked on Bitcoin, holding that $78,000 true market mean. As long as that foundation holds firm, the Thursday Clarity Act markup becomes the undisputed primary focus for the entire week. If the Senate signals a clear, regulated path forward for stablecoin yields, capital is going to flood into highly regulated stablecoin issuers and the banks that support them.
Which leaves us with this final massive thought to chew on for the rest of the week. With the plumbing finally upgraded, the AI agents coming online, and the Clarity Act on the table, will Wall Street capital fully rotate into regulated stablecoins next? The infrastructure is finally ready. Now we just watch the capital flow. Thanks so much for joining this explainer. Make sure you keep an eye on Thursday's hearings and never stop learning.